Welcome to a Market Brief special. I'm Caroline Woods, and I'm joined by Margaret Reid, Senior Portfolio Manager with the Private Bank at Union Bank. Margaret, appreciate you joining us. Thanks so much.
Thank you for inviting me, Caroline. Nice to see you.
All right, let's drill down into some sectors. First off, retail and consumer spending. Given the fact that the entire country is now at least starting to reopen, what's your outlook for retail?
I would say it's a balance of recognizing one that for retail we have had a overstored economy for the past decade in the United States. So one, the fact that consumers with this work from home recession, the acceleration in the usage of e-commerce, which means for any retailer that does not have that capability in that supply chain, they're likely to be losing market share. They're likely to have to close stores. And we're seeing that now with the level of bankruptcies and store closings that are being announced, and I would expect more of that. So some estimates of at least 100,000 stores in the United States could close over the next 5 years. I saw some estimates, as much as 20,000 by the end of this year. So I'd say on one hand, we are seeing that recovery in retail spending, a lot of stimulus checks being spent out there, but we're also seeing a lot of pain from the business side of the equation because we're in this overstored economy.
Moving on to another sector, healthcare. We're, of course, obviously still in the midst of a health crisis. What about opportunities in that sector?
Healthcare has absolutely been a ballast in the storm. I would also say that despite the outperformance of healthcare as a sector this year, it's also amazingly still trading at a discount to the S&P. And meanwhile, we have companies that are driving an incredible amount of innovation, trying to battle the fight against the virus. We have several areas of the healthcare sector that are benefiting from the reopening. So think about medical device companies. So there's actually some good opportunities within healthcare, both on valuation, the fact that these companies generate a lot of cash flow, very little dividend risk relative to other sectors, and in an environment where interest rates are as low as they are, I think dividends will continue to be attractive in this environment.
And what about tech? It's certainly not a cheap sector, but is it attractive to you?
Technology has always been both a defensive and an offensive sector if you look over history. And the reason is because one, technology is driving change in our economy. Two, the balance sheet structure of these companies is very robust. Think about Apple's balance sheet, Google, Facebook. These are all companies that have very low leverage relative to every other sector. They generate an incredible amount of free cash flow. And now we have just entered this environment where there will be an acceleration in the digitization of our economy because of what's happened with COVID-19. So in my mind, technology, yes, it's trading at a premium to the market, but you likely have much longer, higher than market growth for that sector over the long term.
We'll leave it there. Margaret, thanks so much for joining us. Really appreciate your insights.
Thank you, Caroline.